Traders, welcome back to another price action trading lesson. In this lesson, we're going to talk about how to predict directional bias of the market using price action rules. So if I want to predict where the market is going to go, first, I must understand what's the overall structure. And second, I need to follow the trendline rule, because if I'm going to follow the trendline rule diligently, I'm able to predict reversals or trend continuations. So if I'm going to take a look to the left, we can see we had uptrend with the break, move to a new extreme, and the trend is already very weak because the pullbacks are broad, we're breaking below EMA, and it's quite sideways, slightly tilted up. And then when I'm observing a weak variation of a trend during the pre-market session, I tend to draw these channels tighter because weak trends are not as strong, especially during the pre-market session. If, however, after open, the price action is going to continue working higher, we can always adapt, but I prefer to draw them tight. So we have a break, move to a new extreme, flat EMA is indicating possible consolidation. You can see the resistance is being formed. You have a push below EMA, leads to overshoot, two-leg pullback, high probability setup, second entry short. However, it was above EMA and we didn't get the lower high confirmation setup. And now we created new extreme. So this means that I need to pause looking to sell because downtrend played out with the break and new extreme. However, if I'm predicting reversal, I need to definitely see some push above EMA because I cannot just blindly buy the bottom in the no man's land. So as long as we're below EMA, I cannot go long. However, I'm pausing looking to go short. We created another push down and market reversed back above the EMA. So this is good. This is indicating right now that the bulls are in the market. And what is the pattern, the high probability pattern that I'm looking for? It's the failed second entry short reversal above EMA, because second entry short late sellers above EMA are going to get trapped. Why they're late? Well, because downtrend already played out with the break new extreme and we're above EMA. So failed second entry short above EMA would be a decent reversal pattern. Can you get it? We have a failed second entry short now, but as we can see, the signal bar, even though it is nice, we're not fully at the EMA and we're buying quite high. That's not a big of a deal. More importantly, we're not fully close to the EMA. And we really want to see the reversal pattern closer to EMA, not even the tail is touching it. So this is not ideal setup. Very close to being good. Context is definitely in favor of this failed second entry short, but it was not fully at the EMA. However, if you are predicting reversal here, that means you're reading the price action correctly, and it's always good to understand where the market is heading. Now, we expect new high according to trendline rule. So this time I'm going to reset the count of the highs because I'm counting for second entry long. So here I'm counting for second entry long, and here I counted from the lows for second entry short to fail. So if I'm in an uptrend, I can both count second entry longs and failed second entry shorts. They're both long setups that allow me to go long and take advantage of the structure. However, we never pull back to the EMA and we already have a break and a new extreme. So new high was formed. So as you can see, I need to be a little bit more careful. Yeah, new high was formed. We broke lower and market keeps working higher again. So this is quite concerning. This is more bullish than I would want to see because you already have break and new extreme. So right now I'm a little bit unsure what's happening. EMA keeps holding again. So once again, more bullish, and we're not fully at this resistance. I cannot go long because uptrend played out. I cannot draw any wider channel like this just yet. We are in a trend range, but I cannot go short just yet because EMA is holding every single time. And why are we continuing to go higher after new extreme twice like this? So it is still too bullish for me to sell, but we're not fully close to these highs in order for me to understand that the bullish push is over. So I'm just going to be patiently waiting. And what happened here is actually interesting because we have a new high. There was a first entry long that failed. There was a little second entry long that ended up failing on one single bar. So there is actually a failed second entry long. It doesn't look that way. You would need to see the candles print live, but there is a failed second entry long. And once you see the momentum on a failed second entry long, that's actually a decent setup because this bar looks so bullish. Reverse down and a failed second entry long is always stronger pattern than lower high. This is a trap. So this is a decent setup. Not fully the best one though. You can see your stop goes always one tick above the swing bar. Now you would read the scalp quickly. In case you have larger target profit, you just need to ride this out. You cannot monkey with the trade. Keep your stop where it belongs and you would have survived. But you can see they needed to create a visual failed second entry long, and this was basically considered as a visual failed second entry long. And because market keeps going lower now, what I'm going to do, I'm going to redraw a downtrend like this. I'm going to connect these swings off the highs. I'm going to put it at the bottom. The channel fits quite well. we have potential overshoot, but we keep overshooting and overshooting. This a lot of times means I can widen the channel because the channel is wider. So I'm just gonna extend it and I'm gonna make it a little bit wider. But this is how we're predicting the directional bias of the market. You can see we connected the first swings off of these highs and we understand that the structure is bearish. Here the uptrend played out with the breaking new high, so we understand that the bullish momentum played out and we can expect soon a reversal. There was a felt second entry reversal. Here we have felt second entry long reversal. So you can understand if you're following the trend line rule and you're looking for reversal patterns, you're able to predict market reversal. Now we're not looking for reversal. In fact, we're looking for trend continuation because we have a downtrend working lower. I need to, of course, withdraw the short-term uptrend. I always respect corrections. This is a new low, first entry short. There's a second entry short. Can I sell second entry short at the EMA? I cannot. Why? Well, because we have an uptrend working higher. It visually resembles a one leg working higher. So I need to see break, close out tight, at least attempt to create new high or new high preferably, and then lower high or something like that below EMA. As long as this uptrend is in play, I cannot sell just yet because I need to respect the corrections as well. Okay, there is not only the big pattern but also the short-term pattern. So, and now we have a congestion, a lower high didn't trigger, an even headed trigger, it's too stacked, and now we have potentially double trap, but we have 10 bars stacked right next to each other. There is absolutely no room between the candles, so the congestion is quite ugly. And we simply don't really want to sell this. It is tempting, but the tempting here is only the single bar. If you actually take a look at the congestion, this is 10 bars stacked right next to each other without room in the middle of this congestion, so we cannot really enter. I need to see the lower high breakout, pull back out of the congestion. We'll see break lower, pull back, testing it, and get a lower high. Okay, now the uptrend played out with the visual first leg up, break, second leg up. We have a new high for a central long. We're pushing below EMA, so I'm predicting a failed second entry long. I want to see a new high for a central long, pull back, second entry long failure with the direction of the trend because this downtrend needs to get new extreme. Can get the failed second entry long, and we cannot mark it only continued all the way down here, which is unfortunate because everything aligned. Uptrend played out to like a pullback, downtrend is new extreme. So when everything aligns like this, you want to take advantage of this, but there was no setup here, and now we have a break and a new extreme. Now, as you can see, also I was playing at the time small trailing range here. If I'm gonna measure the first tier, I can actually see that this resembles basically a visual two-tiered trailing range. This is the low, you can see this is the spike up. This is where the candles are, so I'm using it as the bottom of the trailing range. You can still potentially also use the very bottom. There's a gap. A lot of times prices want to see this gap filled, but I have the most confirmations here, so I'm going to keep it right here. We have a break at a new extreme. So what am I predicting? I'm predicting right now that I'm not going to be looking to sell. In fact, I think about possible reversal because not only we have a break, new extreme, and a broad break, so I don't want to widen the channel. Remember, this is a big trend range overall, so I don't want to be really widening channels. This is a trend range pattern overall, and for this reason you can't also be aggressive here because we just broke out of the trend range. So you gotta be careful. We have a break, new extreme, but remember we cannot go long just yet because this is what can happen. You can just blindly buy the bottom and you never know how many pushes lower there's going to be. Now this is a risk to reward setup because the reward is gigantic, so some traders can still buy the bottom and be profitable. Because if your target profit is big enough, you can make it work, but it's always better to wait for the reversal pattern. We have a new low micro to the bottom, first entry short, pull back, second entry short failure again if we are going to have a break above this bar right here, which we do. But once again, so far from the EMA, neutral bar, look at this stem at the top, doji, I cannot take it. I need to see something closer to the EMA. And this is also first leg down, break, second leg down. So you can see you're going to use price action tools to help you identify two-leg pullback, break a new extreme. The low day support is coming into play. Buyers are stepping here, buying the bottom of the trend range. Price action keeps working hard. At first, it looks like we have overshoot, but we keep working hard. So what I'm going to do, I'm just going to widen it slightly. So what am I predicting? Well, I'm predicting definitely the trend continuation. And the pattern I'm going to take advantage of this situation is a two-legged pullback second entry long at the EMA. We have a new high first entry long. Only can we get a second entry long? No second entry long. And market created new extreme. But because this move to new high was so substantial, because EMA held, and because the first entry long generated such a significant push up, this is very similar to a community post I made last week. This is perfect scenario where I'm able to widen the channel, because notice, if I'm gonna make it wider like this, I'm still getting a lot of confirmations here. This is important. Every single time you're gonna make it wider and these first swings are ignored, there's empty room. That is a sign that you may be widening too quickly. But here, I still keep the structure. EMA still holds, and only first entry long generated push, which is not happening often. It can happen if there is the key entry point, the wider channel. So these are the clues the market is telling me that I need to make sure I'm gonna make the channel wider. So I want to see two-legged pullback second entry long. Still, we keep working higher. We're not at the EMA, and now we have overshoot. You can see big bullish bar breaking the trend channel line. A lot of times when you see big trend bar like this at the top of the move, far from the EMA, this can mean bullish exhaustion, a lot of profit taking, and not only we have overshoot, we're also bouncing off the high of the day key level. So I have two reasons to expect price action to have stronger pullback, and as you already know, according to rules, once you see overshoot, you have to skip the very first second entry long, because we can have break of the trend line or possibly even reversal. So respect the downtrend. Overshoot can generate stronger pullback, especially if we're bouncing off the high of the day, important range resistance. Second entry long below EMA fell, but it is definitely to be expected. We explained we have to follow the overshoot rule. Now downtrend played out with the break in new extreme. So now that everything is clear, downtrend played out, I expect new high following the trend line rule. But I want to see the push above EMA, and I want to see high-low confirmation setup, or I want to see a failed second entry short. Okay, we're pushing above EMA. This is great. I expect new high. I'm predicting the new high following the trend line rule. High-low would have been great close to the EMA, and now we're breaking quite high up. Now here we have high-low confirmation setup, but there are a couple issues here. Number one, we already pushed quite far up, and the longer this push is, the more I want to see second entry long. But let's say I'm really trusting the high-low. You can see the body is still far from the EMA. And you know, this is not what we want to see. It is very aggressive. I'm going to mark it. I'm mainly marking this because I want you to pay attention to this, because when the downtrend plays out and you're above EMA, you're going to get the new high. So you want to make sure you're going to study this and expect new high. But because the body is far from the EMA, I really wanted to see the second entry long. But when I was checking the NASDAQ 1500 tick chart, there was a failed second entry short forming. So I was losing my hopes, because it looked like the trap on the NASDAQ will make it working higher. And I'm going to show you guys that pattern a little bit later here. And market created a break and moved to new extreme. So I'm not thinking about selling. By the way, for example, can you sell this? No, remember, when the trend range is big on its own, and this is basically a 46-point move up, this is decent trend, you cannot be faking the breakout just yet. When the range gets big on its own, we have to get that failed second entry long, reverse a pattern below EMA. This move was too steep, it was too strong, there is no broad break and move to new extreme, everything is too bullish, and the range was too big. So if you want to sell, you need to see the failed second entry long below EMA, because it is simply just topic and context is not good. Market, however, as you can see, after new high keeps working hard. This doesn't happen often, and you can see the trend is extremely strong. How do I know the trend is strong? Well, it's simple, because you cannot even pull back to the EMA, number one. Number two, as you can see, bearish pullbacks are tiny, a lot of small bars just slowly working higher. Bunch of first entries are working, so this is a very, very strong uptrend. You can't even touch the EMA. The pullbacks are so tiny. You have overshoot, first entry long, pullback. There is no break about this bar right here, and now you have broad two-legged pullback and basically mini failed second entry short. And notice how sideways this break was of the channel. We have a leg down, very broad break, and a failed second entry short of the EMA. And this is a good sign You don't have to be afraid of the overshoot. Number one, this uptrend was so strong that you can easily make it wider, because when the trend is strong, you're gonna have to force a bit more aggressive setups. That's just the nature of strong trends. But because this momentum is so sideways, this means the EMA is holding more. There is support. This is a great second bar. This is a great high probability setup. Felt second entry short. Uptrend is new high. We have a break and move to a new extreme following the trend line rule. So once again, this is how you're gonna predict where the market is gonna go. Now I have to pause looking to go long because uptrend played out. Now I was even thinking about even wider uptrend, but if I want to take longs, I want to see the push above EMA to confirm that the bulls are in the market. This is not happening. Let's see if we're gonna push above EMA. Okay, but we're back below and price action is struggling to break above EMA. So at this point you have to delete the bigger uptrend. If you're watching this, I'm going to show you the uptrend I was watching, something like this. Keep an eye on this because this was quite a strong uptrend. But once you are failing to push above EMA twice, this is where you have to look back and see, okay, break new high, and now I can expect price action to go lower. So I can draw a little bit of a wider channel, something like this. It fits quite nicely off of these lows. There was a mini second entry short, which is quite tempting, but you're probably not playing this channel at the time when you're watching this live. You know, it is a decent setup, but you need to be observing a good channel that fits the structure. Now we have a new low, first entry short, pullback, second entry short, smaller resistance is forming. We have very broad two-legged pullback. This is textbook, first entry short, pullback, second entry short at the EMA, at the trend line. Great high probability setup, second entry short. Market keeps working lower strongly, so I can make the channel just a little bit wider because it's not distorting the price action. The break was minimal. So I'm gonna widen the channel like this. We have small overshoots, so I'm gonna respect the correction here. New low, first entry short. Now we have a second entry short, but we are above EMA and we have potential small overshoot. You know, the risk is so tiny. If you're willing to risk it, I can see why. You know, so more aggressive trader can take a risk, but because you have tiny overshoot, which can lead to break of the trend line, and you broke above EMA, you can see you're still not below EMA, you're still above. So this is not what you want to see. So I'm mainly marking this for very aggressive traders. You want to be patient, respect the overshoot, break, back below EMA, and now we have lower high confirmation setup. Great high probability setup. Actually, it was a failed second entry long because it happened the same thing as we had earlier. New high, first entry long failed, a little second entry long failure because you expect new low according to trend line rule. Market created a break, and now we have new extreme. To finish the lesson here, we're looking at the Nasdaq. As you can see, breaking new extreme after overshoot, brand new uptrend established, breaking new extreme, and similar to what we were expecting on the ES, high low confirmation setup, expecting new high, followed by new low, first entry short, second entry short failure. You can see textbook high probability setup. Look at the massive runner this trade generated. This is what we're looking for, where everything aligns, context fits, high probability setup, and pretty much this is all you need. One great setup to finish the day. I'm gonna wrap it up. I hope you had a good trading day, and I'm gonna talk to you next time. Good luck with your trading.